Welcome back. We have been discussing the just announced minutes of the Reserve Bank's Monetary Policy Committee. The committee met on August 8th, of course, when the policy was announced. And today we have the minutes. I've been in conversation with Kaushik, the chief economist from Deutsche Bank. In a minute, we are going to be joined by Soumya, Kanti, Ghosh as well. Kaushik, I just wanted to ask you, what is your sense in terms of what the global situation can be? It looks like the Fed will taper. So won't that impact when the Reserve Bank will start removing liquidity?
So, Latha, we have a view that the Fed will announce its tapering in the November policy, and by the end of this year or early next year, they'll start the actual tapering. And RBI's policy normalization started with the VRR announcement. But if you see in the last policy, they kept the 14-day tenor. They increased the VRR quantum by 2 trillion. Our call is that in the October policy, they'll increase the VRR absorption through longer tenor VRRs, which is 28-day and 56-day, which is to take care of durable liquidity. Okay. And then in December, they will hike the reverse repo rate by 20 basis points and another 20 basis points in February. And April to September of next year, we expect 50 basis points rate hike from RBI.
Okay. Thank you very much for being with us, Kaushik. And may I now welcome Soumya Ghosh, the Group Chief Economic Advisor at State Bank. Well, first up, Soumya, I wanted to know from you whether you think now from a 4-2 dovish to hawk, it has become a 5-1. Would you say that this policy actually leaves us, this minutes leaves us more dovish?
Yeah, actually, Latha, thank you. I think I just want to point out a couple of interesting insights from the policy, which actually could mean that the policy statements is a little more hawkish than what the markets are anticipating. Okay. I think you just look into the word persistence in the document. It has occurred 4 times. Okay. And the word transitory has occurred 6 times, which has been all the time used by the RBI person. Okay. And in the persistence inflation, it has been used 3 times by Ashima Goel and 1 time, as usual, by Jayant Verma. And the term inflationary expectation has occurred in the policy document 27 times. Ooh. I mean the expectations. So there is a clear sense that inflationary expectations of possibly getting anchored, and Professor Goel makes a strong speech for cutting fuel taxes, saying that actually if you allow the inflation expectations to get continuously elevated, the increase in 1% actually could, the trade-off between and fiscal cost will be more higher in terms of an increase in interest payments than a cut in the fuel taxes. Absolutely. So there is, even though the statements more or less subscribes to the policy that growth is weak, but the final point which I'd like to make regarding Dr. Patra is that Dr. Patra also makes a point that the rates need to remain at those low level because the economy was slowing down even before pandemic. Yes. So therefore, we have to support it through the cycle, and possibly keeping in mind that this could be a cold turkey approach in terms of hitting on the inflation numbers gradually.
Fair point. Actually, Soumya, you're absolutely right that there is a very strong comment coming on fuel inflation by other members as well. Mridul Sagar also says that inflation is high, not because of aggregate demand, but because you have such a big fat tax on fuel, and that pushes the price level up. But Ashima Goel really makes that point very strongly. The government would be wiser to drop the fuel taxes. It may lose 0.5% of GDP in terms of taxes, but if interest rates were to rise by 1%, it is government which will pay that higher interest, and it may lose even more in terms of cost, in terms of an expense. So that's a very strong point. Ashima has been a previous PMEAC member. One hopes that this very strong comment is heard in the echelons of power. But Soumya, I greatly appreciate the way you have done this AI or a machine learning on the text by pointing out that inflation expectations is occurring repeatedly. Would you say the market will react negatively on Monday? I thought it would react positively, that yields may actually inch down a bit, no?
No, I agree with you, Latha, point. I think much of the statements which has been made in the policy, actually markets goes by its own way. So I think the markets will be mostly indifferent to the minutes. So you may actually trade down, given the fact that if you actually look into the numbers, the total reverse repo is now 8.4 lakh crores. Yes. The government cash balance is at 3.2 lakh crores. And core liquidity continues at 10 lakh crores. So that means that demand is very significantly weak in the system, and there is no reason to believe that there could be government borrowing because government is not spending. So if that is the case, interest rates could the yield levels, which is mostly a signaling device, could hit back could actually decline from the current level.
Okay. Well, Soumya, before I let you go, I want to know what is your estimate? Have you changed your expectations as to when liquidity will be withdrawn and when the reverse repo rate hike might come? Dr. Verma makes a very strong pitch, and we had a couple of economists earlier saying that they are expecting it by the end of the year. What about you?
See, in terms of the reverse repo, I think it is still maybe premature to talk about reverse repo hike, even though ideally we want that to be hiked, but possibly it's now a toss-up between February or April.
Oh, okay.
And in terms of the liquidity, I think if you can adjust the numbers which I said right now, the most plausible time for liquidity withdrawal could be the October policy beginning, and maybe the reverse repo could be hiked next either February or April. But mostly, I think the way the policy has been crafted, I see a little the chances of a rate hike of reverse repo this year receding.
Okay.
As of now.
Oh, all right, all right. So basically, even on Monday, the reaction will be dovish, and you are not expecting the reverse repo hike in the current year. Thank you very much, Soumya Kanti Ghosh, for joining us. The key takeaways from our economists is that the policy is, the minutes are actually a little more dovish than the statement itself. And it seems to indicate that 5 members are clearly dovish, but 1 person is indeed hawkish. Therefore, the markets will react a little benign on Monday, and even the expectation of a reverse repo hike, although a couple of people believe it's December, there are enough believers like Soumya Kanti Ghosh who believe the reverse repo hike will come only next year. So not much increase in rates expected at all for all those of you who are planning a home loan or a car loan. Not much is expected by way of increase in the cost of money. However, my sense is that after these minutes are done and dusted, it is the voice of Jayant Verma which is going to prevail. He is arguing that if you are going to speak about reverse repo in the statement, then you jolly well let us vote on it. And his argument that reverse repo cannot be that low. It has to be high, or we are risking an inflationary spiral. It is these arguments that are going to become perhaps a debating point in the days to come. I think that will be seriously debated, whether the MPC should be given the right over reverse repo as well. With that, we conclude this special broadcast on the minutes of the Reserve Bank of India's minutes, the MPC's minutes. Thank you very much for watching, but stay tuned. There's lots lined up for you after this break.